How's it going, everyone? Welcome to the Personal Finance Takeover. My name is Sean. This is my co-host Fabian, and today we're going to be looking at dollar cost averaging while investing. Now, don't forget to hit that like button. It really helps us out with the YouTube algorithm, and subscribe if you want to see future videos. All right, so dollar cost averaging, let's define it real quick. It's just going to be simply a set amount that you want to invest into, say, an index fund or a stock or just any type of investing that you're doing, and it's going to be the same thing over and over a long period of time, and that's going to average out.
Exactly.
Yeah.
Yeah, because you're buying stocks regardless of the market conditions. You're buying it whether it's high or low. You're consistent with buying that same stock over a long period of time.
Right.
So, we're talking 10 plus years or longer.
Mm.
That way you're not trying to jump in at the right time. You're not buying high and then and losing money or whatever, but you're just being consistent with it. So at the end of the 10, 20 years that you were investing, it averages out to a higher return for you.
Right. So something we were talking about right before we jumped on this was your 401k contribution.
Yep.
And that it's a set percent that's constant every single time.
They pull the money out from your paycheck before you even see that in your bank account. Like,
Right.
just for one example, like when I was talking to a couple, friends and coworkers and stuff, when the pandemic hit and now, the stock market took like a 30% hit, a lot of people stopped contributing to their 401ks, which I think is probably the worst mistake you can make, because not only did they were buying stocks at a higher price and then it tanked. Now all of a sudden they're not buying it at that dip to where they're going to be able to catch the stock prices up as it's heading up and make all that return. So for me, it's as long as you continue with that average, with that consistency of buying it regardless of the market conditions, you're going to come out ahead. And I think that's what people see. They see a lot of red. They panic. They're like, I'm not going to buy stocks anymore. When in reality,
that's the best time.
That's the best time to buy the stocks.
Right.
When there's a market uncertainty and stock prices start dropping. If you have extra money, you have extra cash. That's the perfect time to buy. And with dollar cost averaging, regardless of the stock price, you're still buying into that. So you're buying some at a high price. You're buying some at a low price. But at the end of the day, after a long term of investing, you end up actually benefiting and actually making money off of it.
Right.
So.
And I think that's the key is it's a long-term position.
Yeah.
Like you're not doing this for a month buying.
Yeah, this isn't Dogecoin to the moon kind of play. This is like, setting yourself up. And the good thing is you're not, taking your life savings, dumping it in something that's hot right now and potentially losing all your money. This is something that you take a small amount and over time it's going to grow. So I think it's the patience. It's basically a patience game when it comes to investing long term and doing this dollar cost average. Like one thing to consider is that you're able to, with dollar cost average, set up automatic investing to where you're buying, that mutual fund or buying into that index fund or ETF and just have the same amount pull out, every week, every month, whatever time frame you want to set it, and just being consistent with it. And that way, you're buying at a consistent manner. That way it'll net out a bigger return over the course of 10 plus years.
So dollar cost averaging, I think it's a really great technique to apply to your investment strategy. And it's just something you implement over a long period of time, get that automatic investment going. Something also just we talked before was reinvesting those dividends. That's another thing.
Don't forget to do that. Don't forget to reinvest your dividends because that's the only way you're going to grow your position in that company and get a higher dividend payout next time they pay out dividends. So that's a good call out.
So dollar cost averaging, let us know if you guys are doing this down below in the comment section. Also, don't forget to hit that like button if you like this content and subscribe to the channel. So thank you guys for watching. We'll see you on the next one.
Peace.